Hey everybody, welcome back. Well, here we are again, 45.50, and we've been dealing with this now for about a month. You wouldn't think with the way the market's acting that we are really at the same place that we started all the way back in mid-November. There are some cracks. We're going to go through those cracks. We're going to get pretty technical about what the players are doing. I think there's some swings here that we should be paying very close attention to, especially with today's action. The economic data across the board so far supports our thesis in the bond market. We're going to get to that and the disconnect that we see going on, but we're all aware of this level that's sitting right in here. There's very little to say about it. I'm not going to spend a lot of time on it. We all say it. You want to watch that 45.80, 4600 seems to be the other spot that we hit, and we are going to drill into this on the hourly. But there's very little to do here in regards to putting these moving averages in and spending a lot of time on it. We can all see that we closed below the 12 for the first time. Again, I use a 12, a 22, and a 55. I'm more interested in the positioning of institutions, and I think it's something that we need to talk about because when the dust settled today, it became a little bit concerning, and we'll get into that. Pardon me, we'll get into that. And as always, I appreciate the fact that I don't edit these and just let them roll and your comments and just share them. It saves me so much time and I can pack so much more information in here. So you have no idea how helpful that is. So I do appreciate your comments there. But in regards to that, you can see right over here when you look at the numbers, you're right there at that 45.98.50 today, and you weren't able to get through. Look when you got through. So we as traders are always looking for things that are a little different, right? And again, I don't want to spend a ton of time on this because there's a lot to spend time on. But this is something that as a trader, if I'm swing trading, all my swing trades stop when that happens. All of them. I don't want to be swing trading when I'm below the 12. Now, does that mean that they're going to stop on every stock? No, but it means that the majority of names now, I have to have almost a special situation, and we'll get into that in greater detail maybe Saturday. But right now, no, my breaks go on. Over, tries to get through 4,600 again, Matumboed, below the 12. Last time you were there was November 1st, so it hasn't closed below for 30 days. And we can just kind of go through this and say, well, does it matter that much? Didn't matter here. Didn't really matter here. Certainly mattered here. It certainly mattered here. And it certainly mattered here. So it's good and it's bad. I mean, you can see it mattered here, but it is a data point. And like everything else, it's one data point. Now, this is rolling below the 70. If you followed me for some time, you know I follow RSI very closely. You know that this is a sell signal for me as well. On top of that, I have another sell signal that I use that's proprietary. I don't know how I'm going to show it. I'm trying to figure out how to do it. It triggered right around here. It did on the Nasdaq as well too. Gave us an intermediate sign. I was going through this in the community today talking about it. It happened around before December 1st, really, that little mark right there. But at the same time, it still fit into with what? We're below the 12. We're below here on the RSI. I mean, it's all fitting. I don't like that this is pointing down. And one of the other things I'll do is just show you this. So what I do is I take it. Anybody can do this. There it is. Anyone can do this. I take a 3, a 5, and an 8, and I put them on a 15-minute chart. And I just want to watch the world go by. And what am I looking for? I'm not just looking for where they are position-wise, though of course I am. I'm looking for positioning. So in other words, you can see the flip right here where right into November, right before November, see the flip right in here? And I can zoom into that so you can see what I'm looking at. I'm looking for this flip. I'm looking where they all cross because it's that cross where the 8 gets in position, the 5 and the 3. That's when you get the most move out of the market. And then, of course, you're going to have times where you're like, well, geez, maybe it's going to crack, and then it doesn't. I mean, nothing's perfect. But you're starting to see this slope. And as you're seeing the slope, you're going to notice one thing about that slope, and it is something that I've been watching and I'm paying attention to. The slope of the 8 is starting to point down. Well, that's not what you want. On top of the slope starting to point down, if we just were to go here, and let's just get rid of these for a moment, the 3 and just look at the 8, you're sloping down. It's not where you want to be. It's just not. And so when you start to see that, you want to pay attention to it. If you just take that out and get rid of all the other noise, it'll make your life a little easier. Sometimes looking at 1 versus 3 and then implementing them will be a little more helpful. But you can all see that decline. And if we get here and take a look at the ES, you're going to see something pretty similar to it, but more stagnant than that decline. But remember, you really don't have many rallies in the market unless you have the Nasdaq. So if they're not going to buy risk, which is basically the Nasdaq, you're not going to have a huge rally. So this is something that we're watching, something we're paying attention to. And there's some other things as well that we were looking at. Now I'm going to show you this. This is something, again, that I use. This is proprietary. I'm going to only show part of it, but essentially what it is when this flips from yellow to green, I pay attention to it very closely. And it's really done fairly well with things like that. And pops over the yellow, it means that I should be looking for possible short entries. Pops down, retest the green, I should be looking for possible entries back into the market. And then you can start seeing the slope. When the slope changes, my antenna goes up, but what I really want to focus on is this. I had yellow, and then I tried to turn green again, and I was unable to do that. That's a sign in and of itself when I start to have this little battle, and then you can see the yellow is overpowering. I tried to get back and turn green. I was unable to, and then what happens here? I crack and I start to roll. All right, so let's just say that you don't have my super secret indicator, which it's really not that complex, but let's just look at it this way. Here you are, 16,050. If you don't get above that, I would not be going crazy here. I would sit down, watch and wait, and make sure that that does what it's going to do. Now, let's look at this with the ES. Okay, same thing. Now, but when we really get into this, and I think we should, there's November again. And what we're looking for, change in trend. So we pop over, we have a little battle, but then it gets right back on track. Well, you can see in here all the false breaks. Here's yellow, yellow, green, yellow, and then turns yellow again, starts to roll. Okay, but let's say you don't have a fancy indicator. Start looking at 4,600, right? Sometimes simple is the easiest thing. And then I'm sure you guys already see this, but I think it'd be remiss to just not be Captain Obvious here and point this out, because sometimes we just miss the most simplest of things. And let's just put this up and let's click this on so that stays. Whoops, and then we'll put it back. So I'm sure we all saw this, but it's there. It's definitely there, and it's definitely an issue. You're going to want to watch 4550 tomorrow, because if that starts to go, then this will just start just kind of coming down this way, and that's going to be an issue for you. And then, of course, you're going to have all your other moving averages start to roll, and as they roll, technically it becomes a self-fulfilling prophecy. The one thing that is very bothersome about all this, I should change that language a little bit to not bothersome, but the one thing that I would certainly pay attention to is this. I would definitely pay attention to the fact that the bond market is absolutely rallying like no other. And the equity market does not care anymore. It very simply does not care. I mean, you look at IWM, and I'm wondering if this is all tax selling. We'll find out. This was ADP. We did this on the pre-market public call today, and I would suggest that you tune in or at least watch that. They're done at 8:30 to 9. Even if you can't watch them, when they're done, I save them. Everything's always saved, so you can always watch them. So, and we have a lot of fun coming up with a lot of ideas. I don't have all the ideas. We share ideas in there. So it's very different than most shows that just sit there and pontificate. So now we can see here, 103 came in. We're looking for 130, 106. You get it. It was good. Now you're going to have Friday's data. Remember, ADP uses 30 employees. That's their average company has 30 employees. Tries to get through, can't. Tries to get through, can't. Welcome back here in the middle of nowhere. I mean, is that the end of the world? Not really. I mean, we've done it here where we popped up and went sideways for a month, up, went sideways for a month. We moved a lot in a very short period of time in this index. So I'm not sweating it, but I'm not crazy about it either. I'm really not crazy about it. So out of all the indexes, this looks the best. But even these little dojis that are coming down like these gravestones, you still complete day two. I mean, it's still important that you get that. You're probably going to have day two. So then the question really becomes, what's the catalyst? Well, if the catalyst is not that they're going to cut rates faster than anticipated, what's the catalyst that's going to get the ES up? And who are going to be the buyers? And this is when it starts getting into not only sectors, and I want to go through a trade that we did so that you can see it, actually one from yesterday, and I want to talk about action in some of the stocks today. But I think we need to take a look at the smart money, dumb money index again and just see something, because we looked at it on Saturday and I said if it started to turn that we would bring it back. Well, I think we need to bring it back. So in front of us, we should know what this is, but this is smart money, dumb money. And if you've been around, we do not call it that. We call it institutional retail. So we would refer to the smart money as institutional and dumb money as retail. And there are calculations on this. This is not just guessing what's going on. This is not measuring sentiment, but this is measuring tools that retail would use and tools that smart money would use. For example, large futures contracts. For example, 3x levered ETFs. Okay, so that's how they decide that. But what we want to talk about and what we want to really focus on here is, can this give us any data? So please note that this is January 21. And we know that we're not going to pay attention to this, and we know why we're not going to pay attention to anything that's going on here is because this is when the Fed was injecting $1.7 trillion into the stock market. So we know that that is completely immaterial, and that is fantasy land, and we're never going to see that again. All right, so now we're going to look at what happens when the market's allowed to do what it's supposed to do. and just trade. And what that's going to tell us is a couple things. Number one, when we see anytime, and this is where the Fed stopped, by the way, right in here, shocker. But if you see every time that smart money is leading and over 0.7, this level, it starts to get a little wonky. Wonky is the technical term. But what we've noted over time is that's not the trigger. What's the trigger? The trigger is when you're up here and then you break this level. Well, that's good news because we haven't broken through that yet. And if you look here, you could stay up here for a couple months. So that's not really the end of the world, or you could stay here for a week or two. So that's not really something we should worry about, right? Okay, something we're going to pay attention to, but understand that the trigger really is when you're breaking here. It's not just being above it. If you were using just above it, you would have missed this entire move right here. And as well, if you use this, you would have missed this entire move here. And there's a little one right there that you would have missed. But even here, would you want to close because smart money's or dumb money's overextended? No, you would have missed this entire move. So of course you don't want to do that. But what you need to do is be cognizant of what's happening there. Now, the other side of the equation is what happens when smart money moves? Well, when smart money is at the top, that is when what? You have a bottom. When smart money is at the top, you're putting in a bottom. Okay, smart money at the top, it might not last, but it's there. Got it? All right. And then when smart money is completely washed out and you have these huge spreads, you're putting in a top. Smart money puts in a bottom, you're putting in a top. Okay, smart money puts in a bottom, you're putting in a top. Let me say it again. So now you got it. All right, great. What's the trigger? Well, this is a 3-year chart. So let's drill into it a little deeper. All right, now we're looking at a year. So you can see right down here, January 23rd. This is Sentiment Trader. They do an excellent job. I have zero affiliation with them. It's a product. I pay for the service. I did reach out to them and make sure that it was okay that I utilized the service in these videos, and they were fine with it. And I really, appreciate them letting me show people how to utilize this because I find some of their tools on there are just excellent. It's really not that expensive either. I feel like an ad now, but it's really not that expensive. So here we are, and what are we doing? We're up here, but we know what? It doesn't matter that we're up here. What matters is that. Okay, so we know that. It doesn't matter that we're up here because we would have missed this move, right? What matters is what happens when we crack here and how fast we're going to crack here. Well, in this case, you can't tell, but in this case, it actually took only about a week before we were there. So that's something else that we have to pay attention to. So besides some of the indicators that I looked at and showed you, 3 to be exact, this is starting to get to a point where maybe we're a little overextended over here. Maybe we're not going to get this, And again, if you look at this, you're basically looking at 6 weeks. And how long have you been over here already? So you start adding it up that way. And then this point, you were up there for about 8 to 9 weeks. But okay. So we know where we're at and we're nowhere near here. And we know when should we pay attention to this and when does this look like it gets toppy? Well, this is the inverse. When the smart money starts buying, they start buying why? They're going to start buying because they think the valuations are good and retail's going to panic. And you can start seeing right here how that's starting to turn up. Now, for our purposes, I blew this up, and what I'm doing is just from June on so that you can really get into this and see how this is playing out. You can see how you settled right here and where that turn was. And let's lock that on and leave that there for a second. There we go. So you can kind of see what happened there and then see how that plays out after. All right. And then you can kind of see how this plays out after as well. But more importantly, what's happening here? We're setting up to cross that line, very similar to how you set up here to cross that line. You could actually argue that the smart money crossing the 0.3 is actually a better indicator of when you're going to put in a top versus waiting for dumb money to start cracking. Because this actually led, in this case here, I don't have 30 data points to give us something statistical significance. I can only play the hand that I'm dealt. And this is the hand that I'm dealt right now. So when I see something like this, is this a pretty significant correlation? I think it is. And I think we need to be aware of that. And I'm going to show you something else that I personally use to determine what's going on. And it's really just sentiment and what's happening with my trades. And I'm going to walk you through that in a moment here. But I would be aware of this. To me, dumb money is way overextended and too giddy right now. And we're starting to see that. And then at the same time, what we're starting to see is smart money is starting to look at getting involved. This does lead to a possible top. We need to be aware of that. Now, can you put a top in the ES and the SP500 and still make money? The answer is yes. what you do is you just have rotation over and over again. What you're going to do there is you're just going to have something where you're just going to be in a position like this, and all you're doing with that, right? All you're going to do is just go, okay, we're going to buy energy, and then we're going to buy financials, and then we're going to buy basic materials, then we're going to buy, XLI, and on the cycle goes. And meanwhile, the market does what? It goes straight or down. Okay. So there's still going to be rotation here, and I think that's based upon some of these sectors and how depreciated there are. So there's still going to be opportunity, but I just think this sideways action that we're seeing, I'm not really sure what's going to get us out of it if this good economic data is not getting us out of it. And on top of this good economic data not getting us out of it, right? You had great economic data. The bond market is absolutely imploding and dropping, as we talked about. The dollar is actually still coming up a little bit, but it's stagnant. And if that's not going to do it, what is going to be that impetus? Non-farm payrolls on Friday? Let me show you something else. Now, as far as swing trades, this was something that I put on today and tried to enter on the way down at a critical level and hold, and it did not hold. And I just want to point this out. When you start to see sentiment shift, you want to pay attention. What do I mean by that? Every single one of these software names you could buy. Every single one of them you could buy. They missed earnings, didn't like it. We were down here, up 50. Didn't matter what the four letters were. Had earnings, up, went higher. It just did not matter. CRM, gaps up, goes higher. And the hits go on. Crowd was down after hours and wound up going even higher. They all did this. Snow was down $10, okay? Wound up gapping up. They were all doing it. They all reversed. MDB did not reverse today. It did the exact opposite. It sold off. And people will say, well, maybe it's geared towards them. ASAN did the same thing. Okay, and let me just clean all this off. This is something that when I start to see, that's a change in sentiment. And I could sit here and look at these earnings and they crushed. On any metric, they crushed. You could say whatever you want, MDB. You could tell me about the mix. You could tell me about the gross margins. They crushed. You beat by 90 cents. I mean, you absolutely crushed. You almost doubled what you were supposed to be. Okay, 90% up, 90%. So when you see that, you have to pay attention to it. Also, I put 2 swing trades on today. We did day trades today, and I do want to walk you through one trade so you can see how I did it, exactly how I did it. I think it's really important. I did 2 trades today, 2 swing trades. We did a bunch of trades early in the morning. We did well with those, but 2 trades that I like a lot. One was trying to catch right in here. And no, my trades don't always work when I say this, but I don't get stopped out on swing trades during the day. Like it's very rare for me to put a swing trade on, and people that are in the community will tell you this. I could a week later be stopped out of it, but for me to get stopped out like right away, I was looking at this Rivian and how we got over, look how this got over the 55 and then pulled back, and you can see that pullback. This kind of stuff you really want to pay attention to when you start to see sentiment change like that. The only time that I put trades on like that where I was stopped out right away, and this was something that we were up over like close to $1 and at one point like 95 cents. But the last time that happened to me, and people in the room will know this, they've been in the room, was here. And that was actually July 28th. So what happened on July 28th? And that's where, you start connecting the dots, right? If you remember what happened on certain days where the sentiment shifted and you note sentiment shifts. So like I went back to it and I'm like, okay, well, what happened July 28th? Well, that was right here, right? Hold on, let me find it. It's right here, okay? That's when the dollar started its rally. Well, that's interesting. And then I started looking at this. And if you note, we've been talking about the dollar a little bit more. See, when something starts concerning me in these videos, you'll see like, hey, he hasn't been talking about this for a while. And then you'll start seeing me pop it up. So the way that these crosses work, when you have a cross, a golden cross or a death cross, like here's your death cross and here's your golden cross, 55, 200. Some people use a 50, use what you're comfortable with. You'll see from here on took 3 months and then the market crashed. Or really came in hard, really didn't crash as much as just dropped. So what is this telling us? Why is this important? Why is this something that we must pay attention to? Well, I'll tell you why you have to pay attention to it. You have to pay attention to it because this is something that's telling you that, hey, we might hold the 200 here. Hey, look at the RSI here. Now, what happens if the dollar goes higher to the equity markets? They come in. So the question bodes, is the market tied more to the dollar or is the market tied more to the bond market? Right? That is now the question that we have to ask ourselves. And how do I get there? How do I even think of something like that I have to pay attention to? I have all those indicators. Hopefully you're following how we got here. I have all those indicators that are going off, that are flashing. And then I have a signal on my own trading that hasn't happened since July 28th. And that gives me another signal. Now take a look at this. If we look at the market, and up top is the dollar, and this is today, and this is the S&P, and then we look at the bond market, which is down here. And we can see that the bond market pretty much was in the same range the entire time. So the bond market's staying the same. Equity market's rolling over. What's happening at the same time the equity market's rolling over? The dollar's going higher. So what is this telling us? And here we can actually just drop the demarcation line, and it becomes even more glaring when this started to happen, right? You can actually even go back to this time and zoom out of that and just go from here. And then at the same time, we're zooming out of that. Right now, we can just get rid of TNX and just see how glaring that is. Okay. And as someone that watches me says, that is absolutely glaring what's going on there. So what do we need to be watching? Where am I going with this? You need to start watching the dollar. We need to start watching the dollar again, because the dollar is what's moving the market. It's not the bond market anymore. It's still moving it, but not to the extent. So we're seeing that disconnect from the bond market, and the dollar is becoming a focus. Why the dollar is becoming a focus right now versus the bond market, I guess we'll find out later. As always, somebody always knows, and we'll go from there. But I do think that it's really pertinent that when you start seeing names like NVDA and they start dropping, and this is not ideal, by any stretch. I really wanted to hold here. Candidly, I'm sure everybody did that was interested in staying long, but we didn't. And on good news, and we broke. And what I don't like is these bars. Like, these are called Marbuzu Black, very similar to this. You have a little bit of a wick, so it's, to be super technical, it's not there. But you have a trend line right here at the top of that. We all know the 55's right here. I'll pop it in a minute, but you have a trend line right here. You broke out of the trend line, reversed, and you popped back in. If you take this and you clone them and you put them over here, it tells you pretty clearly what's going on. Now, if you overlay the simplest of indicators, you can see how that's playing out right there. And that's definitely something that we have to watch tomorrow. You can actually take a look at the low here, and that was 452.71. If you come over, okay, you just missed having a bearish engulfing right there. So it's not ideal. I don't know that I'm going to be looking for non-farm payrolls to save us. We'll see what non-farm payrolls is, and we'll go from there. But this is certainly something that I'm going to be paying attention to, and I would suggest that you want to watch the leader. Remember, as goes NVIDIA, goes the Nasdaq. I mean, that's just really been the way that it is. And I don't see any reason that that's going to change. I do think there's some earnings to go over after hours, but I think there's some other things that we should focus on as well. I did state that this was one trade that I really wanted to show everybody yesterday, so I'm going to play the clip in a moment here so you can see it live. I think the best way for me to show you how I'm doing the trading, even the day trading, there's a really good swing trade that I could cut out where we bought MSTR and we made like 100 points. And I'm going to edit that out, make a video out of it so you can see some of the swing trades. But this is a really good way of how we entered the day trade, how we utilized this dragonfly the day before to identify this, and then how we traded into it when we knew that we had data coming in at 9:45 and 10 o'clock. So listen to this, but I think it's really important to note that the gap fill happened and then we reversed. But watch this clip.
As we bought Microsoft, and right there, and I'll walk through the trade again and what we were doing. We were watching the wicks, and it became Wick City. It became very clear. And then when we flipped right here, I wanted to be long. That was my stop. So this is where I'm in at, right around 366.40. Retest holds, starting to push. If you were doing this for a day trade, you should be pulling money out on the way up. I'm trying to see if I can get a gap fill, but also realize you are heading into PMI at 9:45. You're going to want to watch that, okay? You're well over $1 now on Microsoft. So do what you want with that. I have $2 on you. I got to be careful going. I'm on $2. All right. I'm going to pull something out up $2, pulling something out. I don't want to go into 9:45 completely loaded for bear and then go into jobs. Jolt's number is going to move the market, guys. The Jolt's number is going to move the market. Up $2 on this, guys. If it's a day trade, you want to make sure you're pulling money out. You're about to go into, you definitely don't want to go past break even now. So if you're not willing to go I'm willing to go to break even. If you're not willing to go to break even at this point, you got to be pulling money out. See the wick, see the doji, it's starting to make a decision. So right there, see it? You're going to want to watch that. Okay. I would like to have had the gap fill before then, but I don't think we're going to get that. I don't think I'm going to get my gap fill before then. That looks like a nonsense drop. Let's see how serious that drop is. So you're going to want to just watch this. Yep. So you're going to want to pull money out if you're not willing to ride that drop. I did a nice little move right there. All right. So right here, you're going to want to be out of the trade if you did that for a day trade, unless you're willing to hold 8 to this number that could drop you precipitous in 4 minutes. Okay. Day trades are over $2 locked in. $1.50 from here if it's a day trade. If you're trying to hang in there because you're looking at this, right? These are decisions you have to make. I can't make them for you. But if you're looking at like this dragonfly and you think we're going to flip the dragonfly because this is all what, which or what, price rejection. If that's what you're thinking, then you stay in the trade and you look for the gap over here, 374. Okay. If you're not thinking that, then you lock it in and you get out of the way and you let this number come out and you go forward. All right. I'm up $3. I'm going to pull something out. I'm right back. Gap fell. So I'm going to pull something out here. I Microsoft. I'm the winner. Who's the winner? We are. You're up $3 on this. Completely gap fill. Let me just go straight up. This would be my target. But there. Hold on. This is my target. I don't know why this is, hold on. Sorry. This is where I could have an issue. You're up $4 from this here on that trade. So I'm saying here, still great trade. You didn't want to just take any risk whatsoever. Now you're up 4. So usually at these times, they'll just pull money out. But I'd like to see how we have this 371, 37. I already pulled money out twice. I'd like to see these targets. They're my targets on the day. Okay. 137, I'll pull money out. 374, 40, I'll pull money out. Let's walk through this Microsoft trade. I'm sitting and watching the wall go by. I'm going to give it a little more time. All we did on the entry was watch this. We already marked it from the day before on the daily chart. And all we did was just watch this level here. I'll show you. That was the open. And then you have a wick here. And then what are we getting here? We're getting more of a wick. Then what is this? We're getting a wick with this filling in the wick. Then what are we getting here? Another wick. So you got 3 down here. And then when we flipped right here, it makes sense to try it because at that point, this is my risk, right? Even if I'm using that, but I'm going to use this again. Like if I see that again, it's pretty much the same. But that was my risk. Flip here and I flip that level. You watch how you respond to the open. It just made sense. So we were able to get in cheap. 360.40 is what my staff was actually, 42 or something like that. So that worked great. We didn't obviously use the 9 and then it's trading up. And all you're doing is watching. Then you're coming into that 945 number. That's what I'm saying. Like if you don't want to play games, there's $2 right there. You just take it. Gap fills back, retest the gap fill. Could have taken that. Either, I mean, still a great trade. So in here, you always like, whenever I hit a gap fill and I'm pushing into it, I usually pull money out. So, and now you're set. You want to watch this level and see how it goes. Now on a 5-minute chart, if I sit here and I break that low, I might take out more. All right. But other than that, I'm not really going to do, I'm not going to do a whole lot here. I really feel the need that I have to do a lot. Nice trade worked out really well. I'm going to trim right here. I've hit once, rejected. Second time I didn't break through. Right into this, I'm going to trim right here. But we're trimming right into that, or I'm trimming right into that, which is right here, just in case. So now I've trimmed here. I trimmed a little push and I'm trimming right into that. So if you're not trying to stay for the gap fill, what you do is like, let's say that you get to this and then you reject again and take up that low, you probably just want to get out. I pulled enough out that if I got to break even at this point, I don't really care.
So I hope you found that helpful. Instead of going through the usual suspects, I just want to take a moment and suggest that you start looking at the bigger trades that are going on out there. Start looking at the utility sector. I've been trying to point this out to people. I know it's not crazy because they're not talking about YOLOing options in the GameStop, but this is working. This stuff is really, it's working. It's very easy. And the name of the game is to be profitable, right? All these kinds of utility trades, if you start taking a look at them, they're all doing exceptionally well. I've been talking about these names for some time now. VNO, I think we're up $2-3 in this trade. At this point, hit a new high today and hit a new 2023 high. I mean, how many names that you're trading are hitting new 2023 highs right now? So I really want you to think about focusing on the interest rate trade and think, does this stock get affected by interest rates? This SLG, something we've been playing with, same thing, hit a new high today. It's even though they back off, I don't care. How many stocks are out there hitting new highs? And I would stay focused on that. There's a reason that, and people don't get this, and that does look, and let's be really clear about this. This does look like a blow off top. There's a reason why people are buying Affirm. There's a reason why they're buying UPST, okay? These are all linked very clearly to interest rates, both of their businesses. So that's where you want to be. As I've been telling people, it's REITs and regionals. You take a look at DPST and you can see today, I believe it hit $80. So you want to spend time going through those charts, seeing which ones of these appeal to you. You might not want to do regionals. You might not want to do REITs, and that's okay. But I think that you're being remiss and just missing what's probably the easiest trade of 2024. Like, they're not going to raise rates. There is zero chance of them raising rates next year. It's just really, there's nothing out there that's leaning that way. And we can spend more time going over that on Saturday. That's it.